Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Delta Air Lines, Inc. quarterly report. Delta Air Lines, Inc. offers a wide range of businesses and services to its customers. At the core of its operations are scheduled air transportation for passengers and cargo within the United States and internationally. The company operates through two main segments: the airline segment, which provides passenger and cargo flights, and the refinery segment, which is not specified in detail. In terms of specific services, Delta offers domestic and international flight routes to various destinations around the world. Its domestic network includes core hubs in major cities such as Atlanta, Detroit, Minneapolis, St. Paul, and Salt Lake City, while its international network spans across multiple continents with key hubs in Amsterdam, London Heathrow, Paris Charles de Gaulle, and Tokyo. In addition to flight services, Delta also provides aircraft maintenance and engineering support, including repair and overhaul services for its fleet of approximately 1,314 aircraft. Furthermore, the company offers vacation packages to customers, allowing them to book travel arrangements and accommodations in one convenient package. Overall, Delta Air Lines, Inc. has established itself as a comprehensive provider of air transportation and related services. Delta Air Lines, Inc. market capitalization of $44 billion is significantly larger than the average industry peer of roughly $5 billion. This shows that Delta Air Lines, Inc. holds a significant advantage in their industry. Delta Air Lines, Inc. trades at a lower price-to-earnings ratio of 10 times and a higher price-to-book ratio of 2.12 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The leverage on the balance sheet appears elevated, with liabilities of 74% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. Shareholder equity has expanded consistently over the past 5 years, with growth supported by rising operating income. This suggests the company is profitable and financially sustainable. The share count has increased over the past 5 years, while revenue has continued to grow. This suggests the business may rely on shareholder dilution to fund expansion. Investors should closely monitor whether growth can eventually be sustained without dilution. The income statement shows that the company have been growing its revenue annually and the operating income have been increasing. This shows that the business model works and the business is expanding. The primary drivers of revenue growth or decline can be identified through an analysis of key financial metrics. A significant increase in operating revenue of 12.5% to $15.854 billion is a notable trend, indicating a substantial boost in revenue. This growth can be attributed to the rise in passenger revenue, which reached $9.5 billion, and cargo revenue, which stood at $1.8 billion. While there is no clear indication of a decline in revenue, it's worth noting that operating expenses increased by 14.1% to $15.353 billion compared to the same period last year. This increase in expenses may pose a challenge for the organization, potentially impacting profitability and future growth prospects. The financial performance of the company underwent significant changes between two reporting periods. Initially, the company reported a net loss of $289 million for the 3 months ended March 31, 2026. However, this was reversed in the subsequent period, where the company recorded a substantial net income of $1.4 billion. This dramatic shift from a net loss to a net gain can be attributed to an improvement in profit margins. In the first reporting period, despite a 12.5% increase in operating revenue, the operating expense rose by 14.1%, resulting in a net loss. Conversely, in the subsequent period, the company's improved profitability led to a positive net income. The exact reason for this change is not explicitly stated in the available information. Nonetheless, it is clear that the company's financial performance has undergone a significant transformation, with a notable improvement in profit margins contributing to the reversal of its initial net loss. The company's financial performance is a positive indicator of its ability to generate cash from its core operations. The data shows that the company has been consistently generating significant amounts of operating cash flow in recent periods. For instance, for the 3 months ended March 31, 2026, the net cash provided by operating activities was $2.432 billion. Furthermore, the operating cash flow for this period was reported to be $2.5 billion. These figures demonstrate that the company is capable of generating substantial amounts of cash from its daily operations, which is a crucial aspect of any business's financial health. The financial performance of various segments within a company has been analyzed, revealing both strong and weak areas. On the positive side, the passenger revenue segment generated $9.5 billion in revenue, while the cargo revenue segment brought in $1.8 billion. Additionally, the company's operating cash flow was a notable $2.5 billion. However, there were also segments that underperformed. Fuel expense stood out as particularly high, totaling $3.4 billion and surpassing other operating expenses. Similarly, salaries, wages, and benefits accounted for $2.3 billion, another significant expense. These figures suggest areas where the company may need to focus on cost reduction or optimization strategies. Management's outlook and strategy. The company's recent financial report reveals a net loss of $289 million for the 3 months ended March 31, 2026. However, this setback has not deterred management from focusing on increasing revenue, with a notable 12.5% increase in operating revenue compared to the same period last year. To mitigate the impact of fuel price fluctuations, the company has entered into fuel hedge contracts. This strategic move demonstrates management's proactive approach to managing risks and ensuring stability in operating results. Furthermore, the $1 billion opportunistic share repurchase program, open through June 30, 2028, suggests that management is committed to creating value for shareholders. Overall, management's strategy appears to be centered on revenue growth, risk mitigation, and shareholder value creation. While the company faces challenges, its proactive approach and focus on key areas suggest a positive outlook for future performance. The company has made significant investments through aircraft purchase commitments. These commitments are valued at their present value using a discount rate of 5%. This indicates that the company is expanding its fleet or operations by acquiring new aircraft from various manufacturers. However, no other acquisition-related information is available in the provided summaries. In terms of divestitures, there is no mention of any assets being sold or disposed of by the company. It appears that the company has not engaged in any significant divestiture activities as per the extracted summaries. The company's financial activities for the period ending March 31, 2026, reveal some key information. Notably, the board of directors authorized a share repurchase program in June 2025. However, as of the end of the reporting period, no shares have been repurchased under this program. This indicates that while the company has made provisions for buying back its own shares, it has not yet taken any action to do so. There is no mention of dividend payments being made by the company during this time. That concludes the financial summary for Delta Air Lines Inc. Feel free to comment below, and I will be happy to answer them when possible.